and welcome to Bloomberg Quint. You're tuned in to the fine print, and the GST Council meet in Delhi just got over, and the Finance Minister finished with the media briefing. Let's first look at the key announcements that came in. The biggest expectation from this 25th GST Council meet was the simplification of the return filing forms, which means that GSTR 1, 2 and 3 were supposed to be simplified and clubbed into one form and presented to taxpayers. The discussion on that has happened, and what the Finance Minister told the media was Nandan Nilekani made a detailed presentation on the simplification of GST return filing form, and based on that presentation, the GST Council will decide has decided that the filing of GSTR 3B or the summary returns will continue for now and for the time being, and the matter will be taken up again in a video conferencing meet in the next 10 days. The other important news coming in from this council meeting is that 40 handicraft items rates on that will need to be will have been decided to be revised, and the fitment committee will fix the rates for about 40 handicraft items. The other important point that the Finance Minister made was that there was some discussion on inclusion of real estate into the fold of GST, but no conclusion has been reached on that so far. There are several comments that are coming in from individual state FMs. The Uttarakhand FM told Bloomberg Quint that GST rate has been cut on 29 items to 0%. There was no decision, again, he said, on the real estate. The Andhra Pradesh Finance Minister said that the states are worried about compensation, and there are some figures that the Finance Minister disclosed to the media on the division of the revenue that has come through IGST between state and the centre. So the Finance Minister said this, and I'm quoting him verbatim, which is to say that 35,000 crore of IGST will be provisionally divided between centre and the states, and here it will be important to consider what the total amount or the total collection of IGST has been so far. We'll get you that perspective in just a bit. We have with us Bharat Goenka, co-founder and managing director of Tally Solutions, with us on the phone line. Bharat, this was a meet where everybody was expecting that the return filing process will be simplified. That hasn't come in. So weigh in on, are you disappointed? That is one. And two, what sort of changes do you anticipate going forward on the simplification of the GSTR forms?
Yeah. So thanks for having me. So honestly, I'm not disappointed, because I think they have signaled that they are examining it with seriousness, and personally, I'm happy that they have not gone into it with haste, but they're intending to get into it with deliberation. So the fact that they're going to take another few days to reach a conclusion is perfectly fine. In terms of expectations, personally, I think the biggest expectation for any business is to be able to bring predictability of the way they can operate their business, the way they can expect to claim their input tax credit, and therefore calculate their potential profitability and appropriate pricing of their goods. So the earlier you can have certainty of that, the simpler your business is. The more the process is delayed, that means I don't know up till 45 days, or I don't know up to 60 days, or I don't know up to 75 days whether my credit is going to be available to me or not, the more complex business becomes. So that's really the expectation that one has, that the simplification of the return filing process will ease the certainty with which businesses can operate.
Sure, Bharat, two things here. Your Tally Solutions is operating both as a GST Suvidha provider and an application service provider. So you're in a great place to comment on how the first experience of GSTR 1 filing has been, and which was the last date for which was 10th of January. Based on that experience, could you then tell us what are the changes that taxpayers can expect based on the challenges that they would have faced in the 10th of January filing?
Yeah, so if you take from the original intent of GST, so when as a taxpayer, the first presentation of GST of change was that instead of your filing returns, you will be able to file your transactions, and the back-end system will prepare the returns for you. So that was the promise made before GST was launched, but the actual process which you see today, which is called GSTR 1, and the R in the GSTR 1 stands for return, has really flipped it on its head. So it means that as a taxpayer, I'm feeling it as a process of filing a return at a level of detail which I was not used to. So today I think of GSTR1 as a complex process rather than a simplified process. And one of the demands from the government has been that can you convert it back to an invoice uploading process rather than a return filing process? The reason why I'm making this as a critical statement is because it's a return filing process. I will tend to use consultants to do my job, and bulk of the consultants have just been swamped by the total workload from the few million taxpayers who believe that it is not possible for them to do it on their own.
Sure. So, can you also dwell on a little bit on how the experience was of the 10th January filing? And, you made this distinction between this detailed, line item type filing versus a return filing. Is that how the simplification should happen then?
Yeah. So if you take the experience that we have had as a company, we had been swamped by people asking questions about law, including questions about into which section of the return a particular invoice has to go and so on, which really should not have happened. Because if all I have to do is upload my invoice, then none of these questions would arise. And we as a company got swamped with attempting to handle those questions from both taxpayers as well as people who are helping taxpayers, which is the tax return preparers. So the smoothness of filing, which one wanted to see because transactions are getting uploaded, I don't think any of us witnessed that smoothness in its entirety.
And were there cases that came to your knowledge that, the filing couldn't happen because people couldn't fathom the return filing process?
Oh, across the board, that was the case. Because if you take a GSTR1 form today, it's got some 14 or 15 sections, depending upon the nature of transaction that you have made, and they need to go into the various sections. And so those are the kind of queries that people would ask, trying to either interpret the section or interpret that transaction about which section it should go to.
Okay, so Bharat, assuming that the simplification comes in the form that you've laid out, that it just becomes a return filing process, and and consultants can just capture that information from the ERPs, if I understand correctly, of businesses. How will this new form of which has been clubbed between 1, 2 and 3 look like? What is it that essentially at the end of the simplification process, if you were to hazard a guess, would businesses have to capture to be able to file their returns?
So I'm actually saying the reverse, that instead of a return filing process, it should be a transaction filing process. So if I am able to upload my sales, because as and when I make them, because it is part of my everyday exercise that I do make my transactions, and the act of making my transaction should be enough to present the transaction to the government. So as long as the details are captured there, the rest of the things can be taken care of by the system.
Okay.
So instead of pushing the pushing them to the back end.
Okay, Bharat, just stay on with us. We also have Ritesh Kanodia, partner at Dhruva Advisors, joining us. I am going to dwell a little bit more on this GSTR return filing process, Ritesh, because this is the biggest pain point. Bharat has laid out for us some of the problems that his clients faced in the process of filing this GSTR1, the last date of which was 10th January. Was your experience similar to his in terms of the challenges that your clients faced, and did some of them fail despite your expert opinion in filing their returns?
See, I think the largest issue that our clients faced was primarily arising out of the system issues. So it was not that we were not able to decipher the law or tell them, what goes into which basket. I think that was how ERP systems were configured at a later stage. The challenges were in terms of how system accepted the data. So when you upload a transaction, for example, there are two level validation which generally happens. One is at the ASP level and another is at the GST level. So if I upload a transaction and if I have an error, the process which is followed to rectify that error and to again upload the data was fairly cumbersome. Again, there are issues in terms of where your number of line items are quite large. So for example, if your transaction line items are more than 500, you have to follow a different set of process to upload the data. So, those were the challenges which primarily the clients were facing in terms of filing, system not performing so well again. you were not able to file the returns on time because of system error. Help desk was flooded with queries in terms of what is the solution, and there was no solution.
Sure.
So a typical problem, for example, somebody would have filed a GSTR2 in July, which got reflected in my GSTR1 because because of which my transactions got locked. I was not able to upload my transactions because it was not matching with the GSTR2 of the customer. So those kind of things should have been contemplated when GSTR2 was continued per se. There was no reason for my locking of the transactions.
Sure. Ritesh, weigh in on the fact that they have said that Mr. Nilekani made a presentation to the council and he presented a plan on how this can be simplified. Bharat has had some thoughts on that. It should be just me entering the details of my transaction, and please don't expect me to do this line item invoice level kind of return filing. Is that how you see the process getting simplified?
See, I really don't know what is intended to be done because I don't see any simplification of the process happening here. What you're planning to do is filing a 3B and a GSTR1, which is even happening today. What you're merely postponing is the credit mismatch. So what is being said is that let's take the credit mismatch offline. I will, once I file a GSTR1 or maybe a transaction listing of the supplier, the buyer will get a listing of what a supplier has filed. And at the end of the year, if the buyer is not able to explain, so there will be a credit mismatch report which will be generated. And if at the end of the year the buyer is not able to explain the mismatch, the credit would be disallowed. So which means that from an automated process of mismatch, you are now moving to a manual process. This manual process was there in many states, even Maharashtra, for example, you have a J1, J2 process. And we have seen situations where credit was being arbitrarily disallowed, whether it was for genuine or for not genuine reasons. I would like to mention over here that there is a Delhi High Court recent judgment on this issue, where they have said that a system which actually does not distinguish between a genuine credit and a non-genuine credit, a non-genuine supplier, is actually not correct. So, the Supreme Court has actually refused to grant a stay. Okay. What we also need to see how this provision will stand the test of the law going forward if somebody challenges the provision.
Sure. Okay. Ritesh, the other aspect that I do want to talk about is the one statement that the finance minister made, and that is to do with the revenue sharing between states and the centre. Yeah. And he mentioned 35,000 crore of IGST will be provisionally divided between centre and the states. How does this number look? Do you recall offhand what is the collection on IGST so far?
I don't really recall at hand, but I think the intent is to, because this you would be aware that IGST is a total of C plus S. So which means that some portion needs to go to the state and some portion needs to go to the center.
Sure.
So the idea is because this amount was actually lying and there was a revenue shortage, and how do you actually ensure that this amount goes to the center and the state? So you need to do that number crunching calculation in terms of what is the revenue of the share of the center and share of the state. Right. So what they've decided, rather than leaving the amount idle, let's 35,000 crore, let's distribute.
Okay. Okay, Ritesh, I'll come back to this point. We have the CBSE chairman with my colleague there in Delhi. Let's listen into what the CBSE chairman told Nikunj.
Key agenda item today. What has been done in that regards? Will there be one single return that taxpayers will have to file, and whether it will be a combination of GSTR 1, 2 and 3 or GSTR 3B will be clubbed with any other forms? And secondly, there were a few changes that had to be made in the composition scheme. So how more attractive would the composition scheme now become?
Let me answer your first question first. This is regarding the returns. As you heard the finance minister already mentioning, and I've mentioned it before, that you had, as of now, you have 1, 2 and 3. You also have a 3B. So the intention of that committee which was set up was to look at the system today and find a simplified procedure, because it seemed to be something which trade really wanted. So to that extent, the committee sat and there were proposals made and there were some options thrown before the council. In addition, it was decided that Mr. Nandan Nilekani had come up with a third angle to it, trying to simplify it even further. So that too was taken up. So that was discussed at length, but no firm decision was actually taken on it, because it was generally felt by many of the states that this is something that you shouldn't jump into too fast, and perhaps it should go, and some stakeholders who are also the filers of this should also be included. And since there were so many options, the decision that was taken was that let it go back to the committee, that Dr. Pandey's committee, let it also be seen by the IT committee. headed by Mr. Sushil Modi, and let Mr. Nelekeni also be part of it, and then let it be discussed once again to see that, you see, when you're going into such a change, you don't want to go into a change which won't be acceptable. And if you're doing it, it's better to do it really well. So that's the discussion that is.
On the composition scheme, ma'am, how well would it be, how further would it be widened?
Well, let's see. We are hoping, again, it was discussed. You will see the handouts that are being given on the small changes that have been made. But some of this will happen in the law changes. So while some discussion did take place, it's not really in a final mode as yet. And as you heard the Honourable FM speaking, there will be a paper prepared, there will be the formulation, the actual legal formulation section-wise would be prepared, and it would be circulated to all members, and probably it would be discussed after that through a video conferencing meeting.
And ma'am, one more thing, the Finance Minister said that the IGST collections of about 35,000 crore would be distributed between the states and the centre.
Yes.
How would this be done, whether it will require a change in the law, because the credit that had to be given to taxpayers would now be distributed between states and
No,
the
I
centre?
think, you see, this would be a provisional way of doing it, in the sense that what will come later is just being divided now to assuage the problem of revenue, both for the centre and states. So I think after it is dispersed, it would be looked at in terms of provisional to be adjusted subsequently. So there's just a solution which I would look at as a temporary solution for this year.
Last
It's a
question.
unique year, you know.
Ma'am, real estate and inclusion of real estate and natural
None
gas
of this was discussed.
also-
None of this was discussed today.
Thank you so much, ma'am.
Ma'am, we are in the queue next.
All right, that was CBEC chairman talking to my colleague Nikunj in Delhi, laying out essentially what the agenda on the 25th GST Council meeting was. Abhishek Rastogi of Khaitan also joins us on the phone line. Abhishek, what do you make of the announcements that are coming in from the GST Council meet today? Are you disappointed that we didn't get a simpler GSTR return filing form?
See, I think it's a balanced announcement, and they have taken into consideration a lot of aspects of how to improve the ease of doing business and how to make the revenue collections happen in the days to come. So I think from that approach, I think there is a fair balance. Now, as far as this ease of doing business and 3B filing continues, so which means that from the perspective of the simplification, there is an initiative because the 3B filing would continue, but the supplier's invoice would remain the predominant factor, both from respect of the payment of the taxes or the credits. So basically, with respect to the credit matching, there has been an announcement as far as the simplification is concerned. The 3B filing continues, but you know, in a restricted way, the compliances would be done, and so to a large extent there would be some relaxation to the businesses. But I think what was more encouraging was with respect to the benefits which have come to certain sectors like handicraft. Mind you, the government again announced that there will be about 29 goods on which the rates would be reduced, and there would be about 53 categories of services on which the rates would be amended. So from that perspective, I think the rate tweaking still continues. The government wants to, you know, have a fair balance with respect to the revenue collected and the compliances to be met, and that's why few of these things like e-way bill would come into effect from 1st of February. There would not be any deferment as far as the e-way bill is concerned. In fact, 15 states have agreed that apart from the interstate movement, the e-way bill would become operative even for the intrastate movement. So I think from that perspective, the government understands that, you know, there is a dip in the revenue collection. The IGST credit which is available is a huge amount. The transitional credits which would come into the system will again be a huge amount. So there will be a huge larger pool of credits which would be utilized in the days to come, and hence there could be a severe dip in the revenue collection, and hence it is important that all these tax evasion methods which can be, you know, implemented. So this e-way bill is will become a reality in February. Then again, you know, the discussion was with respect to the composition scheme, and it was, you know, not very encouraging to learn that the government feels that, you know, there are a lot of tax evasion issues or by way of under declaration, and the tax which has been collected on this front is only 307 crores. So I think from the government's perspective, if we look, the government is trying to maintain a fair balance of how to improve the collection, how to ease out the compliances, how to ensure that there are no tax leakages, and how to ensure that the business sentiments improves. So from the overall perspective, I think the government touched on most of these aspects, whether these are return filing simplification by way of 3B becoming applicable only with respect to the supplier's invoice, the e-way bill system coming into force, the handicraft sector, which again is an important sector from the perspective of the employment generation, gets the due benefit. Other goods and services, the rate amendment happens. And then, of course, with respect to the composition scheme, there are chances of a lot of under declarations which is happening. And interestingly, I think the finance minister made the point with respect to the direct tax collections, where the finance minister believes that the direct tax collection is fairly good, looks good, and they are 18% above the target. But as far as the indirect tax collections are concerned, while he feels that there is nothing to worry about, but what I feel is that there are a lot of credits which will come into the system, the transitional credits, the IGST credits, the refunds will have to be given to the exporters, and in case of inverted duty structure. So from that perspective, I think the revenue collection will go down as far as the indirect tax collection is concerned. And also this constant tweaking of the rate because of the pressure, because of the populist measures which the government wants to take. The revenue collection on the indirect tax side may again come down. So I think from the overall perspective of the government, they are trying to maintain the fair balance.
Abhishek, also, what do you make of the government's announcement of sharing the IGST revenue with the states on a provisional basis that I believe will be adjusted in due course? The amount that the finance minister said that will be shared between the centre and the state is to the tune of 35,000 crore. I was just looking at some numbers in terms of the IGST collection so far. I just managed to get the November figures, which is to the tune of 41,270 crores. Do you remember offhand what have been the IGST collections so far? And again, what do you make of this decision to divide this provisionally between state and centre?
See, I think there is a lot of pressure on the federal government. The central government had promised that they would, give the compensation to the states if there is a dip in the revenue collection. And I think from the indirect tax perspective, there is certainly a dip in the revenue collection if you see a couple of states, especially Punjab and so on and so forth. So I think this 35,000 crore of IGST credit, they just don't want it to be blocked. While this would be utilized in the days to come by the businesses to offset their interstate IGST tax or the CGST plus SGST, because IGST can be used everywhere. So the government's intention is that, this gets either utilized or the benefit goes on to the state, because at the end of the day, the state also has to perform in its duties. So from that perspective, it becomes very important that the federal government lives up to the expectation of the state governments.
All right, okay. The other point, Ritesh, that is important here, and Abhishek touched upon it a little, was that the composition scheme that the finance minister says has not been enthusiastically responded to. Yeah. He says the collections for Q1 have been 307 crores only, and most people have been below the 20 lakh as per their declaration. That's disclaimer, he's put it out. And this, he said, will be addressed as the acts are amended. What do you see why people are not responding to the composition scheme as well? And two, what can be done or what amendments can we expect on this aspect?
See, I think what one needs to understand is also the limitations of the composition scheme. So what happens is typically there are two types of transactions which are possible. One is a B2B transaction and another is a B2C transaction. In a B2B transaction, when I am dealing with a buyer who is a business buyer, he would be entitled to take credits. Now, if a supplier goes under composition, which means there is some leakage of the GST credit, which is happening in the chain. So why would somebody want to buy from a composition dealer in such scenario? So broadly, if I am dealing in a B2C commodity, that is where, I think the composition scheme comes into play. So retailers selling it to end consumers. Because no business person would actually want to buy from a composition dealer and have some loss of credit, in the supply chain. That's primarily one reason. Another could be probably a lot of businesses who are actually splitting, their turnover. So you have the entire family sitting out there showing some portion of the turnover and going under composition. So, that.
How is the government going to ever be able to address this splitting of businesses and dividing of turnovers to be able to come into the fold of...
See, under the erstwhile excise law, there were clubbing provisions which actually said that if it is established that you've artificially done a splitting and you're showing turnovers into two different baskets, then they can club the turnover. And so there was a threshold limit of manufacturing excise 1.5 crores, and they said we can actually club this if it is proved that you've done it artificially. I don't know what the legislative amendments are, but probably they're looking at those kind of amendments under the GST law.
To be able to allow clubbing?
No, so basically it would give powers to the authority to actually look at a transaction and say that have you actually artificially done the splitting.
Okay.
This is just my thought. I really don't know whether the amendment in the law is going to be in this direction, but that seems to be a good way to address the issue of people splitting the turnover into multiple parts and going out of the tax net.
Okay. The other aspect that has not even taken off, and we've been pushing it all along, which is the reverse charge mechanism, and the finance minister said that this will be considered again for amendment when if and when they come to it. Again, do we then expect that the RCM process will be done away with, or how are they going to address this? Because businesses who have to do compliance on behalf of an unregistered dealer, they are saying that why should we do compliance? It's just adding to our cost and burden, and it's very onerous. How will you tackle a situation like this?
So right now, there has been no discussion around whether an RCM scheme is going to be continued.
So, okay, also, if I add, how are the filings or this data is being captured today when this RCM doesn't exist? If you're dealing with an unregistered dealer currently, no compliance is being done on that?
No.
Okay.
So, because I don't get credit out of that, and neither does he file the returns.
Okay.
So that goes out to the tax net.
Okay. Ritesh, I also have some press release that the GST, that the government has issued, and there have been some changes in terms of rates, etc., and rationalization of certain exemption entries. The one aspect that you were talking to me offline about was, some benefit in terms of transportation that could have benefited IT companies. I don't know if that has made into the press release, but it will be what's talking about in terms of what pain point do you see there?
See, what happens is, there is an item called as motor car, which is outright, not being allowed as credit. So they've just said that, credit with respect to a motor vehicle is not available. But if you look at the use of the motor vehicle, it could be either for personal consumption or it could be for business. So the IT companies use the rent-a-cab operators for various purposes, including transporting their employees. There are security reasons around it. There are compulsion regulatory requirements around it. So, for example, a woman needs to be dropped at home at the night. The logic seems to be that we don't want to disallow you credit because it is very clear that this is for business purpose. That's what the thought process was, which I've been hearing. IT companies have represented to say that allow us that credit, and that forms a very significant portion of the IT company's cost. The rent-a-cab operators, which they hire.
Okay.
In fact, just to mention one point,
sure.
When you talk about a motor vehicle, it is not only about the IT companies, but there are many other service providers who actually are using these vehicles for the purposes of provision of services. And the right amendment could have been that where a service provider is clearly establishing using a motor vehicle for the purposes of providing output services on which he's paying, let's say, 18%. So to give you an example of one of the clients which is providing cash distribution services, and they have cash vans, for example. Now that is clearly used for providing a service where I'm charging 18% GST. So there should be a provision which actually clearly allows this kind of credits, because this is clearly a leakage in the supply chain.
Okay, Abhishek, let me bring you in, and I'm just reading out from the press release. I don't know the import or the impact or the extent of impact rather of the changes that the government has listed out. They have under the rationalization of certain exemption entries, they have said to provide in CGST rules that value of exempt supply under subsection 2 of section 17 shall not include the value of deposits, loans or advances on which interest or discount is earned. This will not apply to a banking company and a financial institution, including a non-banking financial company engaged in providing services by way of extending deposits, loans or advances. Abhishek, what do you make of this change, and what is this exactly saying and clarifying?
See, while I will have to read the entire provision, looks like that this element of interest, etc., needs to be excluded from the purposes of this credit reversal and so on and so forth. So one is when it comes to the banking system, there is an ad hoc reversal of the credit which happens. When it comes to the businesses which are in the businesses other than the banking businesses, then what happens if there is an interest which is earned or the interest which is paid. So I think it is trying to address those aspects with respect to the computation or the credit reversals. But we will have to read that provision very carefully.
Ritesh, you wanted to say something?
No, I would say, so while I will have to go through the fine text, but it seems to be a very interesting provision. So what is happening is interest by law on loans, advances and deposits is an exempt income.
Okay.
Now, which means that you will have to reverse credit on that interest. While this provision was primarily introduced for banking companies whose major portion of the income is interest
income.
But there are corporate, let's say, for example, who keep deposits in a bank.
Right.
Or there are corporates who would earn, interest by way of giving deposit to their own sister companies. And the question which was arising was that because of interest being exempt, do they need to reverse credit? And this issue was even there pre the GST regime. And the broad principle was that no, you need not reverse the credit. Okay. I think this amendment seeks to address that issue. It's a very good amendment, I would say.
Okay.
Very good amendment.
So it will have an impact on corporates, but this will not apply to banking and services and
no.
NBFCs.
See, banking anyways.
Anyway, the interest income is exempt.
Interest income is exempt. It's more about reversal of credit.
Right.
Because the substantial portion of their top line is not GST payable. So there is no question of them taking the benefit of credit.
Okay.
Their major income, the business is earning interest income.
Right.
So, while logically it should apply to the banking companies, incidentally it also covered corporates, where it was not intended to be applied. And I think this provision seems to be addressing that issue.
Okay, all right. So that's a good provision that has come in for corporates. We will, I suppose, look at the fine print more carefully. Ritesh, Abhishek, Ritesh, and Mr. Goenka, thank you for joining us on Bloomberg Quint today. For give you a quick take of what the GST Council announced today.